Happy Easter, everybody, and good Passover as well. Passover is ending. Doesn't always occur where Easter and Passover overlap, but happy holidays to everybody. This is Jeff Scott, and this is my weekend review for April 4th, 2021. Still the third for another hour or so, but I will post this tonight. You'll see it tomorrow morning. I titled today, Will April Showers Rain on the Bears? This might be a month to start thinking about getting more bullish, and I'm going to try and give you the reason why. May flowers may occur in the little poem or whatever that comes from, and we may have Sell in May go away, but I think this April may turn out to be a pretty good month for the bulls. But let's see. I'll show you the evidence and what has me interested. Again, my name is Jeffrey Scott, and my email address, as you can see, is hgsidoc@gmail.com. Now, if you're watching this on YouTube, I'm going to ask you a favor, and the favor is pretty simple. I'm going to pull over a window here, listening to some music, so we'll just use this one. Please click. Obviously, you'll be looking at my mug, which is not nearly as handsome as his mug. If you like this, hit the up thumb. If you don't, hit the down thumb. I don't get a lot of down thumbs because I think, natural selection, people that don't like what I do don't come back. But if you like it, please do that. I mean, if I get enough likes, then YouTube helps to promote it by putting it in some people's inbox. And as you probably notice, I don't have 207,000 views either. Maybe if I put Brett Young picture on the first slide, maybe that would change things, but that's not how I work. The other thing is underneath comments, please feel free to add comments or email me at that hgsidoc@gmail.com. And this is an interesting button here. When I left click it, it brings up quality. Now, I will be recording this in 4K, which means if you have a 4K monitor, you should be able to get it all the way up to at least 2180p or 2160. It looks a whole lot better in 4K than if you try and watch my videos in a lower resolution. So just letting you know that's where it sits. The other thing to let you know is this will probably be posted around 12:30, 12:45 in the morning on Sunday. It takes an hour sometimes or longer for YouTube to process it into the 4K version. And the first version that comes up, I'll be honest, sucks. It's not usable. All right, let's show you why Jeffrey is bullish. As always, this is for education purposes only. Anything I talk about is in the spirit of education and not investment advice. I am a doctor, not a broker. I'm independent. Anything that I demonstrate or show for you, I've paid for. And I don't accept money from anybody to talk about their products. Trading involves risk, and you alone are solely responsible for any decisions you make. From time to time, I'll talk about options, and the powers that be, mainly the Options Industry Council and every broker, think that options are much more risky, and you need to make sure you know what you're doing and educated. And the Options Industry Council website, I think it's oic.com, has some great material. We all heard about the ex-Tiger guy, hedge fund, who lost $10 billion of family wealth in the last couple of weeks and took down some stocks like Alibaba, Vips, and others in the meantime with margin calls. That's leverage, probably a lot of options, and that's why people think they're dangerous. And I totally agree. They can be dangerous. They can also be safe. But you have to know what you're doing and be educated. Speaking of education, I've spent my dues. I have lost money in my first couple accounts. I blew up accounts. Why? Because I had small accounts and I've margined them. Dumb. And if this is you listening, dumb. Until you know what you're doing, you don't margin. And even when you know what you're doing, you need to be careful with margin. I started with CanSlim, improved by Ian Woodward, and a host of folks up here, including my buddy John Person, Sagar, and others. who either have educational products, indicators, or tool sets that make me a much better trader. I own almost everything you can think of because I can. Um, there's a lot of things I own that I wish I never bought because I just never use. And sometimes I'm so stupid I continue to pay monthly fees even though I don't use the product. TradeStation and Thinkorswim are on my desktop at all times, and multiple indicator sets, whether they're from John Person, Sagar's Q tools, or Dr. K's tools, and others. Again, I'll mention other people's products from time to time. Sometimes I'll bring other people to speak on webinars that I invite folks that follow me to come on, but I'm never paid by them. I don't want a percentage of your purchase, and I'm happy being an unpaid volunteer. This is as it is. It's just education. So I just wanted to bring this up, and I want to bring it up because a lot of people on YouTube are different kinds of traders, and you got to know what you're listening to. I am not a day trader. Historically, I hardly ever day traded. I've been dipping my toe in the water because I've been home with COVID, but I am a swing to position trader. I enter trades with targets and stops, but I hope to rapidly move my stop to break even. I've got a whole stop program that I use, and a way of rolling up and out options, because the biggest wealth is created by long-term holding, not active in, out, in, out, in, out. Now, long-term holding is not the same as buying and forgetting. Now, I was up a ton in January and the first 2 weeks of February. I gave up a fair amount of my gains because I don't move quickly. And I've learned that that's been to my benefit long term. Sometimes I think I'm about as nimble as the Titanic. But I use various protection strategies. You'll hear me talking about buying puts. You'll hear me talking about contra ETFs and options on contra ETFs. Now, in times when longer term trading is not working, or during COVID when I'm home all the time, I may trade futures. And again, because of COVID, I've been doing it more than I usually do. I do use a lot of different tools, and a lot of people ask me about algos and where do I get my market calls and how do you do it. This is just one site that I've been using, and I've become a big fan of Discord. I know I have a site that I don't put a lot in there anymore, mostly because I wasn't learning anything. And why would I want to be spending my time where I'm not learning something? So I just want to introduce you to this. I'm not getting anything if you use it. You don't even have to mention you heard it from me. But if you're interested in more algorithmic trading and short-term trading, there is a place on the stocks as well. And where experienced stock traders like myself will post from time to time as well. So this is something I found useful as I've been trying to learn more on the short-term trading part. HighGrowthStock.com, that's the website that I post my videos at. And Ron Brown and I are probably two of the top 5 to 10 Uber users, mostly because we're old and we've been using it since its inception. And Ron is a prolific poster as well. If you haven't been experienced with HGSI before, free 30-day trial. They don't even ask for a credit card. And whether you buy it or not, you can click on investing strategies and see hundreds of movies like this. Stock patterns are cyclical. And I talk a lot about it feels like we're rolling over, then we take a leg up. It's been an interesting market because the spiders and the Dow have felt like we've been just going up, that we've almost been in this stage 2, higher every day. Both the NASDAQ and the Russell were pulling back, but they both jumped this week. And so are we about to go into a run up where all these indexes are acting the same? Maybe. I'm a little bit more bullish than I've been over the last couple of weeks, if you can't tell. Now, if I'm more bullish, that means I've looked, and I started last week. I told you I was going to nibble. Well, I did more than nibble, buying stocks, buying calls. Typically, I'll do call strategies. whether it's verticals, especially when there's a lot of skew, when the out of the money call that I sell has a lot more premium baked in because the volatility is higher. Look at stocks like Riot, Mara. Those are some that have had that, where I can get a 20 wide call spread with a month or two in time for about $4. I like that return on my investment. Problem is, it's tough getting out of those until expiration because the short call is going to always be expensive until the end because of that volatility skew. I also have done a couple of my synthetic calls, I guess, the Scott synthetics as well, because I felt more bullish. Because that increases my risk, I will be careful to change things and cover if I feel the market is going to go against me. If you look at the market on Friday, this is just my sector review, and starting here at materials, each of the major sectors with their components, and it's a sea of green. Is there red there? Sure. Healthcare still has some red. Boy, biotech has been sick. Utilities had some red. Well, they're defensive. But if you want to look at movement, look at materials, look at energy, even look at technology for the strength that we saw on Friday and last week. Now, let me go into Thinkorswim. I've been spending some time talking about expected moves. And then people ask me, well, Jeff, how do you even use this? Well, again, the expected move is based upon the predicted option volatility by the market makers next week. So, for example, this is an interesting to talk about why you have one for next week already. If I go into, do I want to do this? Now I'm not going to do it. If you look at last week, I went and I looked at the pricing and options in Thinkorswim, and I showed you where it says volatility and plus or minus, it predicts the move. Well, it's that plus or minus that gets mapped out here. The reason why it looks like we already have Monday is because I guess they treated the options trading on Friday when the stock market was closed. The options were open to 9 o'clock, and as you could see, they were up. They were up a lot here. They were up 1725 points on the S&P, for example. If they treated the options, now is that correct? Or no, that, I think that's still looking perhaps at Thursday rather. But the fact that they traded on Monday, I think they belong back to the left. We'll see if they fix that or change that as the week goes. Regardless, how do I use these? Well, you kind of see here that we started the week in the middle. And the reason why these green and red lines are there is if you were a market maker, you're predicting that that's the move the market's going to make this week. And you're pricing premium based upon that move. Well, it's amazing how often indexes will move within that range. The gray bar is where the last bar closed the prior week. So we closed at the top here. That's why the gray bar is sitting here. The S&P just was within its range all week, closed near the top. The NASDAQ, interestingly, the NASDAQ ripped. It opened on Monday and traded down, but it came back and closed right near where it opened. Tuesday again threatened to go down and reversed. And then Wednesday and Thursday ripped right up to the top and actually closed above. I think that is Fridays. Well, actually closed above its expected range on the week. That's pretty impressive. If I look at the Dow futures, the Dow did really nothing this week as it went sideways and then moved up the last 2 days. You want to see movement and you want to know how I use this? When I saw that the Russell traded down on Monday to the low, expected low of the week, and then had a big move off that level on Tuesday, that was a sign that Wednesday and Thursday you wanted to start buying stocks, especially small stocks. It went from the bottom to the top. What a move. So how do I use these? It just gives me a sense of where we are in the predicted trading range for that week. And when I see something pull to the bottom in reverse, to the top in reverse, I may use that as a signal to change the direction that I'm trading. Now, let's look at the major indexes. I'm sure I confused you all there. I apologize. If you really want to learn about the expected move, the person to learn from is Don Kaufman at TheoTrade. The indicators are indicators that I got when I paid to join TheoTrade. My philosophy on indicators is I don't give away other people's indicators, especially when they're on a paid site. But I'm sure if you do Googling for auto expected move or at TheoTrade or Don Kaufman, you'll find the same indicator that I use. If we look at the indexes on the daily charts, what do we see? We see the NASDAQ has gone up to the 50%, the 150% retracement line, or expansion, I should say. 2 days sideways day, Thursday and Friday. Again, Friday was a partial day because of the holiday. You can see that on Thursday, we hit the all-time closing high and all-time high on the SP 500. How can you be bearish on that? You see the 17-day above the 50 and of the 200. Yeah, you can be bearish. We've had a long run. We're getting extended. But for today, that's pretty darn exciting. All-time high on the E-mini futures. The NASDAQ futures, they look different. They hit their high back in February. That's when my portfolio hit its high as well. Traded down, got stuck below the 50, failed here, but it broke above this week on Thursday. Very big move. Now, optimally, it'd be nice to see it come back and retest, and that would really stiffen my back about being bullish, but it doesn't have to retest. Right now, you got to be bullish, I think, on the NASDAQ. When I show you seasonality, you might even be more bullish. What about the Dow? Like the S&P on Thursday, the 2nd, it hit all-time highs, and it looks like all-time closing highs. How exciting. Again, how are you bearish in the setting of all-time highs, broad-based? The Russell, again, you could have been bearish back here a week and a half ago, but like the NASDAQ, it has broken above the moving averages with a very strong day on Thursday. So I got to be bullish on the Russell here as well. And I'll show you seasonality before we get done. You want to find something to not be bullish on, look at the VIX. It's down to 20, getting down closer and closer to where it lived before the February sell-off of 2020. The thing that's been concerning has been the dollar. And perhaps if I want to be bearish, I would say that's something that concerns me. This is a low close doji, which is a bearish formation. A dollar breakdown below the 200 is probably going to be good for stocks. A continued rise in dollar, I guess we're the least bad of the bad. We had strength in employment numbers, which also will push up perhaps interest rates this week, which is bad for the NASDAQ. Also is out there, but dollar strength probably not the greatest for small stocks. Now, if I look at weekly, I think the big thing I want to show you here, go look back at that dollar. It's at a shooting star. So a shooting star on the dollar. The rest of the weeklies, even not a weekly buy signal came in the NASDAQ. You've been in a buy on the Dow and the S&P. You've been in a buy on the Russell. So, and on the dollar. But a shooting star could be maybe a sign that maybe the dollar's run a little bit too far, and maybe it's going to ease up, which will be good for metals, which showed some strength on Friday as well, the precious metals. So we looked at these. Now let's look underneath the indexes. So if you look at the 10-year, the rates ticked up a little bit this week, not so much on the 30-year. I think they moved up a little bit more on Friday, which may not be captured here because of the holiday. They went up because of strong employment numbers, so that could put pressure on technology. AD lines, both the small stocks on the left and the large stocks on the right, you have both the index and the AD line going higher, so there's no divergences there. The only divergence you really have is you're at all-time highs on both, on the Russell and the big stocks, but not on the mid caps and the small stocks. I look at the NYSE, again, not yet at all-time highs, but you can see it's turned up, as have these ETFs that represent the major markets. And with the rates perhaps easing a bit this week or slowing their rapid gain, even bonds popped a little bit. If I look at breadth, stocks above the 200-day moved up a teeny bit. Stocks above the 40-day moved up a teeny bit, as did stocks above their 13-week new high, new low, the T2121 in Warden. It's at an area that you've seen reversals at multiple times. Whenever you see this thing peak and turn around, it means that you have less new highs versus new lows than you did the day before. And so often that follows when markets either go sideways or pull back. So it doesn't mean the market's got to collapse, but when you get to the top, the markets reverse or don't move up further for a while, and we're approaching that. Hence the comment, we're approaching overbought on shorter time frames. Daily McClellan and the weekly McClellan have the same thing as new highs on the S&P 500. Yet if I look at the McClellan oscillator or the summation index, I do not see new highs. And in fact, I see some divergence, which is bearish. New highs on the weekly, not new highs here. Current buckets, 2/3 of the stocks, or a little bit over half the stocks, are above the midline of their Bollinger Bands in the S&P 1500, which is bullish. You can see most of the stocks are to the right. Very few stocks below the Bollinger Bands, but really not enough above for me to be concerned. No Hindenburg showed up here. As I mentioned last week, there's been some difference between what I'm seeing on the HGSI Hindenburg signal as well as the other sources, and it may be based upon what they capture within the NYSE. The big story has been the absence of new lows. Market tone, this is the Woody indicator, and the only thing showing any kind of weakness this week was the NYSE. I don't know if there's more metal stocks there, precious metals, but other than that, showing strength throughout the market, perhaps it's the utilities. If I look at growth versus cheap stocks, you can see this week that it was kind of flat, the return across all of them, but certainly a hint that as we got more and more ERG, we had a better return. ERG being EPS rank plus relative strength rank plus group rank. And you could see that EPS rank, the better the earnings, the better the return. The higher the relative strength, the better the return. Interestingly, and it's easy for me to tell you why, stocks that had distributed the week before actually outperformed, while the week before growth did horrible. So we had a switch from risk off with growth lagging to risk on with growth leading. Here is the S&P 500 looking from end of day Friday to end of day Friday, was up 1.17%. So that's a great week for the S&P. In yellow, you have a number of the indexes that I follow, from the IBD 50 to the Live Watch and Ready Watch, Market Smith 250, IBD 8585, which is your weekend review. For the most part, outperforming the S&P 500. My current holdings were up 3.75, and that's before leverage. So it was a good week for me. Sector strength is steady. Little bit of weakness in healthcare, but yellow, not green. Again, we're looking at this Woody indicator. Green is good. If I look at the Q tools, I could see that we ended the week with 10 and 1. 91% of the sectors were advancing, one was declining. But if I look at over 5 days, every sector was up this week. It was a good week. Because it's 5 days, it's probably looking at Friday as well, the prior week. If you look at industry advancers, decliners over that period of time, overwhelmingly positive on the industry groups and positive on the stocks. If we look at Friday, this is run Saturday, but it's Thursday data. I ran it today. You could see that on the last trading day, which was Thursday, energy back in the lead, technology in second, real estate in third. Defensive stocks, utilities, staples, and healthcare were lagging. Now it's interesting, materials has lots of different groups, including precious metals, pulling it back. But some of the some of the metals have actually been doing fairly well. Now, if you look here, you can see that energy has been strong going back the leading group over the past year. Over the last month, it stubbed its toes, but over the last week, it's really turned itself around again. Information technology has been doing well the last couple of weeks, but technology's taken a breather over the last couple of months, being more middle. And real estate really popped up here. So it'll be interesting to see, does discretionary, which had been leading, and financials, which have been doing well, will they move back up this week? We'll see. Just a great tool that Sager's designed with the Q tools that allow me to monitor real-time sector rotation. Now, let's say that I looked at this middle of the day and I said, gee whiz, energy and IT are the top two sectors. Well, let's highlight them and let's hit these gears and show me the industry groups within those. And here are the industry groups, and these are the energy ones. You could see this is out of 147 different industry groups in the universe, and these are populated by the SP 500, not 500. The groups that are the best come to the top, and you see a lot of holes in these numbers because we're only looking at energy and information technology. So I looked at the big leaders, the ones that are in the top 5 or 6, and you see refiners, explorers, semiconductor equipment, oil and gas drilling, semiconductors, and oil and gas equipment and services. Pretty clear where the money went this week. Now, I highlighted those and did the stock scanner, and obviously you can't see them, but these are the stocks that made it. Now, a lot of these stocks, the semiconductors especially, just had amazing weeks and made it to the top 2 weeks in a row. Sager's got this ability by hitting those 3 stars there to bring up top 10 stocks that are considered undervalued and with good growth. And then what I do is I take that list and I dump those typically into TradeStation. And this week, here's the universe of undervalued with EPS growth from that test. And the one that probably has me the most interested, I talked about it last week. In fact, I bought some last week, was Qualcomm. Why did I buy it last week? Because last week it had this signal here, which is called a stretch signal that we see in the Q tools after something is getting tired and getting a little bit extended that way. So I had a stretch signal, a big bottoming tail off of trendline support. So last week, I felt it was okay to buy it. Now we got a person buy signal, a high close doji on the weekly, and we're taking off here. This could be some resistance, as could this, but I've come down so much from its prior highs. I think we can run up to 170 or so, which is 23 points from here, almost a 20% move. So Qualcomm looks interesting. Now, just to keep this story going a second, I could pull up for you Vital, and in Vital I could put Qualcomm. Now the problem with Edge is that it's limited to the stocks in the S&P 1500. When I drop it in Qualcomm, I can look in the US or other countries. I can look at the specific industry or even an expanded industry, so I have a lot more stocks that make my screen. You could see here that it's Qualcomm, $137.79. You could see in this blue color here that it's got great earnings, but it's undervalued. That's what I'm interested in. You could see within this industry group, the vast majority of the stocks are green. If I hit the peer thing here, it brings up the stocks in the group and fundamentals and technicals. If I hit the 3 stars, it brings up this list, and a couple of them are different, but there is a fair amount of overlap. And again, easy for me to do this. All I've got to do actually is highlight them, click this here, and then I can go right back into TradeStation. Again, I highly recommend these tools. I use different tools every day, and I try to use different tools on these webinars so I can show you how I use them, because that's how I typically learn. And then I can run very quickly through this list and see if anything else looks interesting. Here's a breakout, a cheaper stock breaking out from resistance. I worry about getting close to price target. Micron broke up, but it's run right into its trend line. Here's one that looks interesting. That's Qualcomm, of course. Taiwan Semiconductor, same as Qualcomm, reversed off a trend line. I think this thing can run. It's on my buy watch list. I'd like to see it clear this resistance, though. Oops. Was that? Oops. Was that not? Was that? Did I? Oh, that was Cirrus Logic. Sorry, that wasn't Taiwan. Here's Taiwan, and it looks interesting. Even more reversal off of a trend line with a bullish candle, even though it's red. Broke off here. I think that does look interesting. Avgo, resistance ahead. Here's another one that looks interesting. Reversal off a trend line, support on weekly, and then breaking out there. So why do I use tools like Q? Make my life easier, folks. I can't look at 8,000 charts every day. I can look at a lot on the weekend, but intraday it makes a big difference. Now, I always follow the canaries. This list was put together in 2013 by Ian Woodward. So obviously we had years of wine and roses, as Ian would talk about it, and we had a giant run up. We topped here back in late January, early February. We are underneath the chandelier stop. We're underneath the 50-day moving average. We actually are just popped above the 100-day moving average. I think we're in an area where we can, we have improving relative strength, as you can see here in the person market catcher. It's getting less negative while the price hasn't done anything. If we can break out here, we still got to get across the chandelier stop in the 50. But if we can, I think that tells a good thing for technology. Know your news and earnings. You got FOMC minutes coming out Wednesday. No one expects any surprises there. You got some jobless claims on Thursday, jolts on Tuesday. So I would call this a medium to low risk week on news. And if I look at earnings, some of these are big companies, paychecks. I own Greenbrier for years, doing very well now. I think it's like $48. Schnitzer Steel. Steel has been something that pulled back this past week. Here's a solar Jinko. Not a big earnings week, but you got to know if your stocks have earnings or not, and it's a judgment call to hold them or not. It's bad judgment if you don't know. Seasonality. I love seasonality. I love seasonality on stocks. I love seasonality on industry groups. It's just another piece that helps me make good decisions and helps me make money. If I know that 9 out of 10 times a stock goes down in the next 3 weeks, do I really want to buy that stock? No. So this is coming from OmniTrader. I don't show you pictures from here often. I always scratch my head with that program. I run a couple of scans that help me, but I probably use 1% of its power. So what it does is it can do a very quickly look at by year, by month performance, pretty much by any industry. So you could see, for example, in 2020, the spider was up 15%. It's 8.6% up year to date, at least through the end of March. You can see here that January was negative, and then February and March were very strong on the SPY. If we look here in April, we can see that going back to 1990, it has been up 2.1% on average in the month of April. 2.1%. When you look across, you see that that's the same as it's up in November, tied for the best month of the year for the spider. It is up 77.4% of the time. You can see the biggest numbers here are all green. The months it's been down in April are relatively modest. And if you look over here from the beginning of the month to the end of the month, that's pretty much a straight line. Look at the difference between March, and this is looking all these years combined, versus April. A very strong month for the S&P 500. How about the Dow? 2.7%. Looks to me like it's the best month of the year for the Dow. It's up 82.6% of the time. Powerful numbers here. The years it's down a lot. You look here, crappy March, crappy February, and April showers bring some May flowers. They may not last forever, but April is a strong month for the big stocks. What about technology? April plus 2.3%. October trumps it at 3.1, but 2.3 is the second best month of the year. It's positive 63.6% of the time. It did in 2002 and 2000 have pretty substantial drawdowns in April in what were tough years, minus 39% for 2002, minus 38.4% for 2000. Interestingly, you go to 2008 and 2007, very positive months for technology in what were bad years. I mean, minus 41% in 2008. What about small stocks? Plus 2.6, second highest on the board, positive 70% of the time in both the Qs and the Russell. Not a time to be overly bearish when you look at seasonality. This came from Ryan Dietrich. He works for LPL Financials. This was a take from @Frank Capillari. The SPX has logged 4 straight quarterly gains of at least 5%. The last time that happened was for the quarters ending March through December of 95. That was the beginning of an ultimate 14-quarter win streak, saying that just because we had a lot of good news and great moves over the last 4 quarters doesn't mean it can't go forward. Also on Twitter from LPL, you could see in April, whether I look at since 1950 in the black, the past 20 years in the bright blue, the past 10 years in the orange, or in the post-election years that we're in this year, you could see that April is a strong month for the stock market. This is using the SP 500, and this goes back to 1950. And prior to the availability of the S&P 500, they were using the S&P 90. So growth led this week. I have to go back and review these numbers because the 50 didn't look like it was up 5.11. I did my measurement from the end of day Friday the prior week to the end of day Thursday this week, and these are the ones that showed up. But broad-based market recovery off of those Monday lows in small stocks. Bonds rose as rates tempered at least through Thursday. For the week, all major sectors were positive. I think it was 11-0 for the week and 10-1 on Friday. IT materials both were up 5% on the week, probably related to infrastructure and the tempering of rate rise. I outperformed. I had a tan early. I nibbled some semis. Again, my profits are off a lot since the middle of the second week of February. Still up 7 figures on the year, so it's still a good year. I have a hard time telling you what percent I'm up because probably 20% up based upon the dollars I had in the beginning of the year. And then if I look at what I've done in the last month, I'm up closer to 30-35% based upon the revised setting of my account. Since I just bought house number 2, I'm paying as we go on house number 3, and I'm still living in house number 1. And the way I buy my toys and my houses, I just take them out of this account. So the amount of money I'm playing with. So, I'm up over $1 million on the year. I'll just leave it at that number. I started the year with 3.1. I've taken over 2 million out. So I'm not up $1 million on $1.1 million clearly. But I don't know how to do the math and the time frame as the money's been coming out. So I'm up at least 30-40%, I would say, on the year. It's been a good year. I mean, it's 3 months. I mean, if I can be up $1 million each quarter, I'm a happy camper. As my neighbor knows, I was up a lot closer to 2 million at one point. as I've said earlier, sometimes I move like the Titanic, and it takes me a few days to catch on, and it's been a rough market, but the last few days have been very, very interesting and positive. April is a very positive month from a seasonality perspective. I showed you why, so I'm hopeful that this technology rally lasts a little longer. I believe the market continues higher this month, driven by the economy. Perhaps it's a herd immunity, but the seasonality is pretty important. Don't forget the old adage to sell in May. Markets never without risk. Based upon the sum of the parts, I think for the first time since mid-February, we have increased risk to the upside, at least for the next couple of weeks. I probably confused you on my return. Anytime you're up seven figures, that's a good year. I just can't give you a percentage because I don't know what basis to use anymore. Very quickly, let's look at TradeStation, and let's just look at the markets to get a sense of what we're seeing. Now, again, the last bar here represents futures trading until 9 o'clock or so on Friday. So if we look at the E-mini, it's in, number one, it's in a buy signal daily, weekly, and monthly. Green price bars, green price bars, green price bars. Green, you could be long or whole. Blue, you can be doing whatever you want. And when it's red, you shouldn't be long. When it's green, you shouldn't be short. These red dots here tell me that there's some evidence of MACD divergence. Not a big shocker. We got higher highs here, not higher highs here on the MACD. We see that they can persist for quite some time, and we've got it on the weekly as well. We were at 75% on the high jump, so that's not an issue. Other than that, the weekly bond goes green. So this is bullish. I'm bothered that I'm up at the top of the envelope, but as we can see here, we can run up above that top for days. Something to watch, but not something to give up on. Dow futures, we have both a Laguerre and a person buy signal a few days ago. Two has MACD divergence, but all time frames are green, and in buys, we're at 81%, so not worrisome on the high jump. Small stocks had a Laguerre and a person buy this week. Green, blue on the weekly, green on the monthly, still very bullish looking. 55% on the high jump, so plenty of room to grow on the Russell. NASDAQ, getting near the top of its envelope, but buy signal, buy, green, green, blue. And we're at 35%. So I see a lot of room to run on these major market index futures. Curiosity is going to kill the cat, and I want to look at the dollar here. Dollar has turned blue, so it's still in a Laguerre buy. It's still in a person buy. It's in a weekly buy and a monthly buy. It'll be interesting to see if those blue candles lead to red and a sell-off, or is it just a pause to refresh before the market goes higher? All right. HGSI, I take the major markets plus top-down analysis, and I look at the S&P 500. I'm going to go very quickly here. It's in a squeeze somehow. Just had a mobile breakout. I don't see any recent Eurekas or Phoenixes. There were IBD follow-through days, I believe, this week. Here's the last Hindenburg omen. A little bit of a pullback, not really meaningful. All-time highs, bullish appearing, not quite at the high jump. If I had to say buy or sell on the S&P 500, I'd be buying. If I look at the Dow Jones Industrial Average, it looks exactly the same. Sideways a few days in a row here, but at all-time highs. Buyer, seller, I'd be buying. Russell 2000, the big jump this week, got above the 50. Right now it's sitting right at the chandelier stop and right below a Wilder PSAR dot. I'd love to see that break above that. That would really make me feel even more bullish on this market. NASDAQ, we've looked at a couple times already, but the NASDAQ, again, broke above the 50 here, right below the RSI, Wilder RSI. I'd love to see that trade above that this week. Bullish. I'm bullish on the markets here. Underneath, let's look at things. They got to get above the chandelier stop in the 50, so it'll be interesting to watch what happens there. I mentioned the IBD 50, FFTY had a good week, still has to get above. It's got some overhead supply, and he's got some potential resistance to get through. If the growth stocks are going to lead higher, the FANGs in the IBD 50 have to move up and get above that 50-day moving average. If I want to look at biotech, if I want to see weakness, it's bounced, but right now it's stuck between the 200 and the 50. It's below the chandelier stop, below the 17. Gapped up and didn't do anything on Thursday rather. You want to see what does work, look at semiconductors. Broke out here. Boy, would I love to see the NASDAQ look like this. I don't want to pick on anybody because I know how she feels, because again, I took some hits. The ARK funds, I mean, Cathie Wood has done a great job. She's amazing returns off the lows, but she is married to themes. As I told one of my coworkers, if that theme is not working, how is she going to outperform? So tech has sold off. So has her ARK Autonomous Tech and Robotics, ARK FinTech Innovative, ARK Genomic Revolution, ARK Innovation, ARK Israel Innovation, Next Gen ETF. So, if you're feeling down on yourself because you've lost some money, you have flexibility that Cathie Wood does not have. You can switch themes. You don't have to keep buying in that same sector. I think that she'll come back and she'll be fine. Just as an example, my best money manager that has a portion of my money, and yes, I trade a fair-sized account, although it's smaller now because of the houses. But I have money managers who manage more of my money. And the reason they do that is because I've got a wife and I want to make sure if something happens to me tomorrow, she has somebody writing her a check every day for the rest of her life or as frequently as she needs it. So I've been with one in particular. He's a small mid cap guy. And, I think I gave him $1 million, and within 5 years, he turned it into about $3 million. That's a pretty good return. Pretty happy with that. He got clobbered last year. Well, he still stayed within his theme, and he had an amazing December, and he ended up being up on the year. But at one point in time, a guy I'm paying money to manage my money was down 30, 40% or 35%. So when you stick with a theme, you live with that theme. And, he proved to me that buying the best stocks, even in a bad theme, ultimately turned out to be very positive. And I think Cathie Wood will turn hers around too. But right now, I wouldn't be buying that stuff until growth is in fuego again. I like to look at the dollar because, well, here's Bitcoin. Bitcoin has sold off, but Bitcoin is still looking pretty good. It's in a nice uptrend. It looks like a place it might want to go higher from. I hate saying anything about Bitcoin because my son is a Bitcoin maven and he's much smarter than I am when it comes to Bitcoin. Look at the dollar, as we showed you, it broke above the 200, came back down. I'll be watching it closely this week. I'm not going to bother looking at the VIX because it's flat as a pancake. With dollar strong, that's been bad for gold, but look at gold. Gold has gone sideways here for the last month, despite the dollar coming up. And if you look at where the person market catcher has been to now, it's actually showing some, perhaps, I'm probably overreading it, but improvement in relative strength. As it's gone sideways, the relative strength has improved some. So maybe we're going to see something happening in gold. If I look at silver, there's the fattest pancake VIX. That's why I didn't bother looking at it. If I look at silver, it's pulled down to the 200, had some kahunas, and a hammer on the weekly also looks like a place to reverse. And I'd probably be buying miners, not just gold or silver bars or ETF. And this is interesting. The miners broke above the 50, although still in a downtrend, and although short term, you have a higher low, and a higher high. Couple pocket pivots, a kahuna, person buy signal, mobile breakout. Still in a weekly bongo because you're in a long-term downtrend. Starting to look a little bit interesting, in my opinion. Again, look at the person market catcher getting better while we go mostly sideways in a box. All right, next thing I look at is industry groups. I hit warehouse view, and no surprise of the 174 total, 94 have 2-day momentum up, and only 3 have 2-day momentum down: food products, department stores, and cruise lines. If I look at an intermediate term, I've got 11 down, and I've got, on the intermediate term, 93 up. So clearly it's a bullish stance on a top-down view looking at the industry groups. So let's look at the 2-day force up. Let's look at the first bunch real quickly. Semiconductors, NVIDIA, I think looks tasty here. Big sideways move. Look at this on the weekly. From July until now, it's done nothing. It broke above the 50 here. Bunch of pocket pivots, improving relative strength. A kahuna, this looks interesting. Let me drop this down to see what earnings are. Earnings are not to May 20th. NVIDIA looks interesting here. Micron already gapped up, so I don't usually chase. Those earnings per share growth are very compelling. I suggest you do your own research and don't just take my word for it when I don't like to chase. AMD hasn't made its move yet. It's below the major moving averages and below its chandelier stop. But since everything else is working here, I want to watch it close. I got to tell you, I love the AMD Ryzen 9 5000 series of processors. I've switched several of my computers to them, and AMD really has knocked it out of the park. Qualcomm, I do like this one as well. Again, it's cleared its chandelier, but still got to get above its 50. I'm already in this one. Mobile breakout from a squeeze on Friday. Pocket pivot, kahuna, John Person buy signal. Relative strength break on all of these are not great, and that's one of the negatives on these stocks. I mean, I go back and look at NVIDIA. I should have pointed that out probably before. It's yellow, so it's between 80, or I think it's 60 and 80. Micron is yellow. AMD, the relative strength rate's 37. Qualcomm, 58. Broadcom, intermediate's breaking out here. This was on the list last week. Still looks tasty. And then I get to the index. That's where I stop. Application software. Yeah, I still own some of my C. I lightened up at around 280. I'm in this since $35. What I said about moving like the Titanic, and wealth is created by long-term holding. It gets a little nasty. I needed some money to pay taxes and a few other things, so I took some off. But C, getting right back above the 50. It's hard for me to advocate buying this thing. It's got a huge, well, it doesn't make money and it's an expensive stock, but it's just been a great move up on the weekly chart. Probably goes higher. Salesforce, I do like here. Again, I recognize it's got a 200-day moving average, a 50-day moving average, a chandelier stop, kind of at the close. It just looks like it wants to go higher. Mobile breakout from a squeeze, person buy signal, and kahuna. All of these stocks that I'm favorable on require a positive market, the NASDAQ to do well. And if they do, these are stocks that I'm going to be nibbling on. I already have a position in Salesforce. MongoDB, kind of a little bit too far down the pattern for my taste. It had a green candle low at the low jump bar and it bounced. Yeah, this could be a good performer for you. At this point of the market, I'd rather be buying things high to go higher than things that are down at their 200-day moving average. Twilio. Adobe, chart looks good. I didn't like the earnings per share growth compared to the multiple. HubSpot I liked a lot. Again, kind of like C, except it's not nearly as extended as C has been, although it's pretty extended too. It's an expensive stock. Right up below the chandelier stop, I'd set my buy right above that. But look at this, a mobile breakout from a squeeze, a move up, person buy, pocket pivot, 2 kahunas in a row, which in my experience is very positive. Relative strength of 88, a little bit higher than some of the others. into it. I don't like that. Nope. Okay. So I will go down typically through the top 10. Plug Power was up here. Last week there were a number of these. And especially with the infrastructure bill that Biden proposed, I got into TAN last week on Monday. And it had a really nice recovery Tuesday, Wednesday, not so much on Thursday. Enphase, Solar Edge, great stocks, some of the regular solar companies. But the problem is, for the most part, fuel cell down in its pattern. Is there anything bullish setting up there? Not yet. DQ, maybe, but it's still too early for me. Here's one that looks interesting. Advanced Energy, AEIS, makes money, good earnings per share growth. Just broke out above its chandelier stop with a mobile breakup from a squeeze, a new weekly bongo, person in a buy, pocket pivot, and kahuna. This is on my short list for potential buys. The only problem with this stock is it's only 310,000 shares. So that's going to temper me a little bit. Biofuels, everything's below the index. And if you look at them, they look a lot, some of these look interesting. Gevo kind of going sideways below the 50. These are the types of things that should do well with that bill. Green Plains, I think they use a lot of grain alcohol additives for gas, breaking out to recent highs. This was on the list last week. Semiconductor manufacturing, applied materials, probably too foregone for my taste. It's up at the high jump. Let's keep going, see if anything's look good. I already mentioned Taiwan Semiconductor, right below the 50, set a buy stop just above the 50. You got your pocket, your kahunas, your person buy, mobile breakup from a squeeze. Looks like it's reversing from a flag pattern on the weekly. Lam Research broke out. This was when we talked about last week. ASML, we talked about it, broke out. KLA-Tencor broke out. Teradyne, Teradyne has not gone too far. This is one that looks interesting right here. Not a cheap stock. Entegris looked like this a week ago, same as Teradyne looks today, and it popped. So a lot of strength in the semiconductor. Biotech has been lagging. I'm still bothered on Moderna by this $53 billion market cap. It's come down some. I still think that all these vaccine plays at some point are going to have to face the music of what do you do now? And we've got 3. AstraZeneca will be number 4. Novavax will be number 5. How many vaccine companies are going to be worth $50-some billion? I can tell you the answer. It's a round number less than 1. If that's all you are. United Therapeutics, they had some good news on the approval perspective, and they popped on Friday. And then, if I'm looking for a chart that looks relatively low risk, gives me biotech exposure, and pays me a dividend like a utility, that has tons of revenue and earnings per share, they've done a bunch of smart acquisitions, I might look at Gilead. Technically, it's been a crappy stock. But look what it did on Friday or Thursday. A mobile breakout from a squeeze, broke above the 200 and the 50 in a person buy, a pocket pivot, and a kahuna. And for those that like dividends, you get paid 4.1% on your money. I think it's a quality name at a decent price. Curiosity, how many billions is that? 83 billion. This is a company that cured AIDS. I have a hard time with Moderna's market cap. I'm probably wrong and crazy. Novavax, as I said, probably the next one to get approved. Or AstraZeneca would be after AstraZeneca, 13 billion market cap. Probably a lot more reasonable. Internet-based services, boy, Shopify's back. I'm going to ignore Shopify personally until it gets above the 50-day moving average. But it looks like some of the other ones I showed you, big run up, pull back in a flag, and looks like it's going again on the weekly, 2 kahunas in a row. Maybe I shouldn't ignore it. Still got to get above that chandelier before I'm happy with it. Uber at a nice buy point. I might set my buy stop right above the chandelier stop. Mobile breakup from a squeeze, a person buy, 2 pocket pivots, and a kahuna. Pinterest, again, another perfect buy spot sitting on the 50. Relative strength rate, 91%. That's what you want to be seeing. Coupa, too far in the pattern for my taste. Zillow, too far down. All right. Internet media. You want to see a beautiful chart? Google. Here is GOOGL, Alphabet. Great earnings per share growth, higher than its multiple. Very liquid stock, despite the fact it's $2,000. Small gap up off the 50 on Thursday rather. Mobile breakup from a squeeze. A person buys pocket pivots and a kahuna. I like Alphabet. I like Alphabet C. Goog without the L. Facebook has already broken out and run some good earnings growth. Baidu got nailed in that archipelago or whatever it's called fund that blew up. The guy lost 10 billion. Holy shamolis. Imagine going home to your spouse and being gender correct by saying spouse and explaining to them, honey, or it could be honey both ways. I lost 10 billion today. Your money, my money, your parents' money, your grandparents' money. Ugh. Billy, this is an entertainment content. Not my kind of stock. It's below the moving average. Disney. Walt Disney, turning out to be a strikingly strong competitor to Netflix. It's not a cheap stock, but its parks are starting to open. Its online service is great, and you can buy it, pull back from its earnings pop in March, sitting on top of the 50. I like Walt Disney here. Out of curiosity, big market cap, 343 billion. Wowzer. All right. What else did I want to show you here? I want to show you the next two. Consumer discretionary. The case for Amazon. Amazon has been basing like NVIDIA since July. Since July, it has had 97% earnings per share growth, 192% earnings per share growth, 117% earnings per share growth, and is projected at the next quarter to have 97%, although it's had a pretty good track record of beating earnings. It trades at a multiple of 75. It's no longer a crazy multiple. Like Google, it has a lot of volume for its price. Technically, I can't touch it here. And probably if I already have a big position. You already know that if you've been here before. But I got puts on my, I go in and out of my puts. So those puts keep me honest or keep me from getting in trouble. I mean, you could argue we're in a trading range, and until you break above that, you're just in the noise. And you'd probably be correct. That said, if I can clear this 50-day moving average, and if I look at where it closed, it closed at 31.61, and the moving average is at 31.72.81. It moves 20, 30, 50 a day. This would be we could be getting to a point where we've had the first close above the 50 in a long time, and there's no lines above me, are there? I'm liking Amazon here. And I'm thinking that Amazon may have a chance with a strong April market to run itself up into earnings. Just a thought. Pinduoduo got clobbered well below the 50. Netflix popped on Friday. Again, why do I think FANGs might be okay? I showed you Google. I showed you Facebook. We just looked at Amazon. And here's Netflix. Netflix looks like it wants to run. Let it clear that chandelier. Good earnings per share growth. Earnings are April 20th. And if I remember correctly, It's got strong earnings seasonality this quarter. Wayfair. So we've looked at a lot of different stocks already. We're over an hour. Let's talk about my buy watch list and some of my thoughts. Maybe pick one and look at it deeper. So remember how I get here is I build a list, and that list had 2,100 stocks. These have come from various scans between TradeStation, Thinkorswim, HGSI, and then a bunch of IBD and other lists. I put a price and volume, it's 5 and 500. I end up with 1242. I looked at every one of those, and then I ran them through filter on TradeStation, and I found 61 that I liked. You notice they all had good days on Friday and a good week. If we look at where they came from, oh yeah, I was going to show you oil exploration. Let me do that real quick. Hold on a second. Oil exploration is the next group I wanted to look at. Let me go back. Well, I know, I gotta use this. All right, this pattern, big run-ups and pullback and a breakout on Thursday across a lot of energy stocks, including great earnings per share growth, and some even with a dividend and plenty of volume. This is Cinemerex. This is a stock that used to be a $150 stock. I remember when it was part of Ian's E-index at one point. Let me change that to industry group. Let's rank them by combo. So just show you a couple of them. Matador, pullback, broke out on Thursday. S&M Energy, ditto. Fang, I own this one, pullback almost to the 50, broke out on Thursday. Callan, I bought this one during the week, shallow pullback. Looks like it wants to go higher. Great earnings per share growth coming in. Antero Resources, big run, sideways move. Looks like it's got a new leg coming up. Southwestern Energy, Bonanza Creek. These stocks look extremely good. A lot of them look good. So let me go back to my buy watch list. So if I look at these by industry group, a bunch of application software. I showed you HubSpot, Salesforce, and C. I really like Zendesk right here. Pullback, look at two kahunas in a row, two pocket pivots in a row, mobile breakout from a squeeze. Earnings are April 29th. I like Zendesk. What else do I want to point out? Not much in the way of biotech except for Gilead, a number of exploration and production stocks. Precious mining, if you got to be there, the ones I liked, Royal Gold. Why? Because it's already starting to move with two kahunas in a row, two pocket pivots, a mobile breakout from a squeeze. Keep in mind, lots of potential resistance in here, and a safer bet is to wait till it clears the 200-day. So that was an early nibble. This one here is Royal Gold. The other ones, let's see. Savannah, uptrend, much better looking chart. Pull back to the 50. Cheaper gold stock, that one looks good, pays a 4.3% dividend. And then in the silver world, wheat and precious metals. Again, is this a Bible stock here? I'm not sure. It's a long-term downtrend. Kahuna, new person buy, mobile breakout from the squeeze. If the dollar weakens, then gold and silver become at play. On the semiconductor space, you can see several that we looked at. For those who want a cheap stock, how about this one? ASE Industrial Holdings, ASX. It makes money. It's in the billions of revenue, so it's not a small company. Its earnings are not until May 5th, so you got another month. It trades over 3 million shares a day, and it just broke above its chandelier stop. You have a kahuna, you have more breakouts from a squeeze. Long term or intermediate term, you're in a downtrend, but that'll probably change pretty quickly. I like that one a lot. Well, I like that one, I should say. And I think that's enough to show you tonight. So I'm tired. You're probably tired. Phillips 66 Partners, I think. Yeah. I'll end on this one. Midstream oil and gas. If energy is perking up, the midstream players are going to follow the pipelines, transportation. And what you see on this puppy here, coming out of a squeeze, first of all, you're above the 200, which I like. Your relative strength rate sucks, but it's pointing up, so maybe it's going to improve. Couple kahunas in a row, a pocket pivot, you're in a person buy. Again, you had a mobile breakout here, and now you're in a squeeze. I'm ignoring the high jump bar because how can this stock be extended when a few months back or a year back it was at 60? So I'm ignoring the high jump bar. Obviously, it's up a lot from its October lows. But what I really like about this is a 10.5% dividend. I talked with you 6 months ago about AT&T. The market's moved on and all that. AT&T is just this little stock that just, I buy it when it gets clobbered because even though it's gone up, it still pays a 6.8% dividend. And if you had bought it $5 ago, it pays an even bigger dividend, or $4 ago, whatever it was. So 10.5% dividend is nothing to sneeze at. On that note, I'm going to say goodbye. We're at 111, 112. Have a great day. Let's hope for a good April. But I'll tell you, you got to be careful because if I'm wrong, hey, I could be wrong. I'm just human. I know what to do about that, and I'm not going to hold on and watch things go down by 30, 40, 50%, at least not without putting puts on and protect them, contra ETFs, etc. And I talked about somebody I know who over-leveraged with too small of an account and is feeling the pain. Be careful. Leverage is great, but on small accounts, I'm talking from experience and from the heart. I blew up my accounts when I was young the same way and you didn't blow yours up. I didn't have enough equity or enough capital. And every time the market pulled back, my accounts blew up. And I realized why. I was over leveraged, underfunded. Bye, everybody. Have a great week.